Oil prices rise sharply as fears escalate of a prolonged conflict with Iran hanging over the world's most important oil-producing region. Shares in Asia fall sharply, and there's a sell-off in Europe too as investors brace themselves for the potential impact of a war in the Middle East. And travel in turmoil with flights grounded throughout Middle Eastern hubs. Analysts say it's the biggest disruption to global aviation since COVID. Hello there, welcome to Business Today. I'm Ty Enright. Global oil prices have risen sharply in response to the escalating conflict in the Middle East. Brent crude, which is the global benchmark for oil prices, jumped by some 10% to touch more than $82 a barrel on Monday, before easing after at least 3 ships were attacked near the Strait of Hormuz over the weekend. Right now, the market price of Brent crude is just over $78 per barrel, although it's not closed the Strait of Hormuz yet. Iran has warned vessels not to pass through it. It is a crucial waterway to the south of the country, through which around 20% of the world's oil and gas is shipped. We'll have more on the latest market movements in relation to oil in just a minute. But first, let's delve in more into the effect that this conflict is having on shipping in that Strait of Hormuz. Maersk, which is the world's biggest container shipping company, has announced it's rerouting ships around the Cape of Good Hope. Meanwhile, insurers have been telling ship owners that they would cancel policies and raise coverage prices for vessels travelling through the Gulf and the Strait of Hormuz. Shipping analyst Peter Sand told us earlier this all adds up to significant disruption for the industry.
We basically see all the expected knee-jerk reactions across the board, including that from insurance companies that have basically kept shipping away, not only from Red Sea transits in the past 2 years, but of course also into through the Strait of Hormuz into the Arabian Gulf right now. So that's of course also prompting many carriers, container shipping owners and operators to stay clear of the transit. Massive disruption to those supply chains that are connected via the Arabian Gulf. Many great container lines do transits the Strait of Hormuz going into Jebel Ali before carrying on. But for the time being, it's local, it's regional, but of course also global, with the Houthis now also threatening to increase their attacks on shipping in Bab el-Mandeb, the southern part of Red Sea. So freight costs are rising. Businesses are not connected. Carriers do no longer accept bookings into the Middle East region. So a massive disruption and weaponization of international trade.
Well, what about the stock markets? How are investors reacting? Stock market indices in Asia saw sharp falls at the start of their trading week. Japan's Nikkei closed 1.35% lower. Hong Kong's Hang Seng shed more than 2%. Airlines particularly hardly hit, with Qantas, Japan Airlines and Cathay Pacific shares all down by more than 5%. European indices are also trading lower across the board. I can give you the latest prices there. The FTSE 100 in London down by 0.9%. The DAX in Frankfurt down by almost 1.9%. The CAC in Paris down by 1.7%. And as we look ahead to trading in the United States, where Wall Street futures are also pointing towards the negative. Kathleen Brooks is a research director at the trading platform XTB and joins me now. Thanks for being with us, Kathleen. Take us into the minds of investors. Explain the ripple effects that they are worried about.
Yeah, I mean, financial markets have definitely had a jolt from this event, even though there was quite a big build-up. The actual scale of it and the retaliation across the Middle East was quite unexpected, and I think we are seeing that play out. But I think, Tig, if you told me a couple of years ago, 5 years ago maybe, that the oil price would have risen by 7% when the US and Iran are technically at war with each other, I would have probably expected something much bigger, and I would have maybe expected triple-digit oil. But it just goes to show that the landscape is very different now. The US is the world's biggest oil producer, so there are a broader supply base. So that has a knock-on impact to stocks. So yes, stocks are lower, but they've been disrupted by multiple things this year. You know, the Sell America trade, fears about AI, credit risks as well. This is something else, obviously, to add to that. But I think a 2%, rough 2% decline for US and European equities is quite moderate at this stage, even though certain stocks, obviously like the airlines, holiday companies, they are really taking a hit today.
The FTSE 100 not affected as badly, and I know that you believe it could actually be sort of insulated to this turmoil. What more can you tell us about that?
Yes, I mean, this is almost the perfect environment for the FTSE 100. It's very heavy on oil stocks, on miners and materials, because the gold price has also rallied today, and also defense stocks. So those big names, Rolls-Royce, you've got BAE Systems, they're all going to be in demand, and that really plays into it. We've also got a very small tech sector, so we're less impacted by that AI disruption trade. So I think that whilst we want a swift conclusion to this, the FTSE 100 has been making, multiple record highs this year already. And I think that, once the dust has settled on the initial stages of this conflict, we could potentially see more record highs for the FTSE 100 and life above that 11,000 level.
Okay, Kathleen Brooks from XTB, thank you very much for joining us with those thoughts. Let's talk more about the oil market now. Let's explore the latest price changes with Carol Knackley, Chief Executive of Crystal Energy. Thank you very much for being with us today. The price gone up in the region of 7%. Put it all into context for us. How bad is it, and could it have been a lot worse?
Well, definitely it could have been a lot worse, but the increase in prices, we already start to see them as soon as we start hearing about the military buildup of the Americans in the Middle East, which was the biggest, if I'm not mistaken, since the war in Iraq. And that the market started to feel nervous about, and we saw prices creeping up gradually higher and higher. But definitely when the markets opened this morning, we saw a much bigger increase in prices. That said, given the severity of the situation, and involving the trade of oil and gas from the Strait of Hormuz. And in some instances, we already start to see some attacks on energy infrastructure. To see oil prices where they are today is not really a terrible scenario from a consumer's perspective, because if the same crisis would have happened in the 70s and 80s, I bet you prices would have jumped immediately to above $100 a barrel, and we are far from that level till now.
Yeah. Interesting. And we know also that the production cartel, OPEC, has raised production only slightly. Could it do more? I know also the International Energy Agency is also talking to oil and gas producers about our response. Could a boost in production help to keep prices in check?
Absolutely. I don't want to downplay the severity of the situation in the Middle East at the moment, but the good news is that there's plenty of oil around. So we started the year with expectation there will be more oil than there will be demand for it, to see what we call market surplus. But definitely every additional barrel from OPEC Plus helps. That said, there is still a lot of spare capacity that the Saudis and the UAE and the Kuwaitis are sitting on. How they can get to the market in the middle of the war, I'm not quite sure. But the Americans are producing a lot of oil, and the IEA still have what we call strategic petroleum reserves that can be also released in the market should we see a sustained disruption to supply and continued upward pressure on prices. So we're not in a terrible crisis yet, but it's unfortunate what's happening in the Middle East.
There's oil prices as a side effect to this crisis, as it were, but then there's also the potential, isn't there, for Iran to use our propensity to use oil as a weapon of sorts, as they try and strangle supply. What risk do you see there?
Oh, definitely. The Iranians have mainly used oil as a political weapon, and their threats to close the Strait of Hormuz, because that is their main leverage when it comes to threatening the stability of the region and the global economy, because the Strait of Hormuz, you have almost 25% of global oil going through there, 20% of global liquefied natural gas going through there. So any disruptions in that part of the world will put upward pressure on prices. But also, Iran will suffer as well, because Iran is still sending a sanctioned oil through the Straits of Hormuz to China, and it relies heavily on that strait. So it's not just other players that will suffer, but the Iranian economy will suffer even more.
Carol Knackle from Crystal Energy, thank you very much for sharing your thoughts with us today. We're staying on the subject of oil, but also airlines continuing to cancel and divert flights in the Middle East in what's been described as the biggest disruption to global aviation since the COVID pandemic. Flights in and out of airports in Tel Aviv, Dubai, Doha and other international hubs in the region have been suspended. The UK Foreign Office is warning British citizens against all but essential travel to Bahrain, Kuwait, Qatar and the UAE. Those already there have been advised to shelter. British government officials are understood to be making plans to potentially evacuate UK nationals. So joining me now is the airline analyst, John Strickland, director at JLS Consulting. John, thanks for being with us. So much air traffic passes through those big Middle Eastern hubs, Doha, Dubai and Abu Dhabi, stopping off on trips going all over the world. Is this essentially going to be put on halt until missiles stop flying overhead?
You're absolutely right. I mean, these Gulf hubs have become an essential anchor point, really pivotal to 21st century aviation, not least the east-west flows between Europe and Australasia. We're talking about typically 500,000 passengers a day go through those airports. And there's not really any alternative or very limited capacity elsewhere these days to some of the routings that people take. And of course, the airlines in question, particularly Emirates and Qatar, have aircraft not only grounded in their hubs, but scattered around the world with crews now out of place and passengers not knowing when that can be addressed.
There's short-term disruption, obviously, but what about the potential for long-term disruption? If this doesn't happen soon, what can the industry do to recalibrate itself and perhaps avoid this airspace for the medium term?
Well, a number of airlines flying, particularly on these east-west routings, including going through to Asia, have been having to use more Middle Eastern airspace in recent times post the Ukraine crisis with the inability to fly over Siberia. So the options are even more limited. As you said there, maybe the British government's looking to assist some passengers to move them, but when the airports are closed and airspace is off limits, then very little can happen. I think there will be a recalibration once we get through, hopefully sooner than later, all this military activity and things calm down. I don't see these hubs in any way being damaged in terms of the role they play in aviation or indeed in the attractiveness of parts of the region, particularly, for example, Dubai, from a tourism point of view. But that's somewhere down the line at an unpredictable time at the moment.
One really quickly, John, is this a situation where disrupted passengers can get compensation?
I think it's extremely unlikely. Even insurance policies for much travel don't tend to cover war risks, so there's a very high exposure. Having said that, at least we hear in the UAE, the country is footing hotel bills for people stuck there. Airlines will certainly do their best to move people and make absolute flexibility in the arrangements for changing tickets, whatever price customers have paid.
Okay. John Strickland, we'll have to leave it there. Thank you very much. Do stay with us here on BBC News for more updates on the market reaction to all the latest developments in the Middle East. Do stay with us here on BBC News.